Hi, it's Marcel with Guaranteed Rate, and I want to talk to you about one of the mistakes that I see sometimes people make as they're going through the mortgage process that you really wouldn't think is a mistake until you see exactly what the outcome is. And sometimes the outcome can be negative if it's done incorrectly. So let's talk about paying down or paying off debts. Oftentimes, when a mortgage company is basically doing a loan, they're looking at the AUS findings, or automated underwriting results findings. The reason that's so important is because loans typically have to be sold to either Fannie Mae, Freddie Mac, Ginnie Mae, or a servicer that is also going to be following those same guidelines. So here's what ends up happening. Let's say that you have $10,000 in your account. You are ready to go buy your first house. That first house ends up being a $200,000 home. Let's say with that, your down payment, you do a conventional 3% down program. Your down payment is going to end up being $6,000. So you now have $4,000 left over. If you took that $4,000 and let's say you paid off some credit cards, let's say that dropped your overall monthly payments by, let's say, 50, 60 bucks, but now you no longer have that $4,000, you may be in jeopardy of not being able to get the mortgage. The reason being is because mortgage companies, through those AUS findings, are oftentimes looking for reserves. What are reserves? Reserves are going to be funds that are liquid that you have access to that are not going to be used in the transaction in terms of closing cost or down payment. Why do mortgage companies want you to have reserves? Because after closing, there are certainly going to be expenses. You have moving expenses, setting up utilities. If you have no reserves, that puts you in a very, very tough situation to where potentially you're not going to be able to get that move done appropriately. You're not going to be able to set up utilities and pay all the additional costs that sometimes are involved with moving. So if that's the case, the likelihood is higher that you're not going to be able to make your monthly payment. So with that, keep in mind, anytime that you do have a limited amount of funds and you're thinking about possibly paying down some debts, whether it be a credit card debt, whether it's paying off a car, whatever the case may be, make sure you talk to a loan officer and see exactly how that's going to impact you, because one of the factors in getting a mortgage is going to end up being reserves, and you want to make sure that you're not lessening the amount of reserves to not have the same positive impact just because you paid off some other liabilities. In any case, give me a call with any questions. 972-672-3246. I'm Marcel with Guaranteed Rate. Thanks.